What's going on, everybody? Michael Silva here. Hope everyone had a Merry Christmas and Happy Holidays. It's the new year. It's coming up. Yes, Happy New Year. Going into 2023, we got a lot to talk about on today's stock market brief show, and we're going to get right into it. So the big hit to the downside today, holding the markets back, was that NASDAQ 100, the big tech stocks, as the 10-year yield really started ripping up today, bringing the bonds down at 1.98%. Massive hit. The dollar didn't really move all too much. It's still consolidating sideways, watching for either break up or break down. The 11 sectors that make up the SP500, we had energy, utilities, and consumer staples led the way. That is very defensive plays. Energy has been, one of the stronger performers on a year-to-date basis, and then utilities and consumer staples are right up there with it, but not as good of a performance from a year-to-date basis, but they have been more there are more defensive sectors, and they've been leading the way. So we're going to get into some individual names within those sectors and kind of show you how I do it. But if I bring up a relative rotation chart here, this is looking based off of the last 5 weeks. You can see really the only thing in the green in the last 5 weeks is utilities. Everything else was in the red. And you can see these long tails here where you can see something like utilities starting to press itself up into the improving quadrant. But we have consumer staples right here in the leading quadrant, and it's pointed towards this upper right-hand portion of the screen, which is a positive sign. So, XLI, XLP, these are a couple of sectors that you might want to be obviously paying close attention to. If we look at a year-to-date basis, you can see, and this is looking at the industries within consumer staples, you can see the ones that are leading the way are food products, soft drinks, drug retailers, and tobacco. And I went through these and I pulled a couple of names out you might be familiar with, you might not, but the reason why I want to go over is just because you can see here that it is in bullish context overall on the names that I go over. So for the food products, this is consumer staples, ADM, Archer Daniels. You can see it's pulling up to this pretty stubborn area of 98, probably to around 100, where we had some prior supply and it broke down and started trying to get back up into that area. But you can see we just have a series currently of, we have a low, we have a higher low, and a higher low right here. So perhaps this could be one to watch if we start getting back above that 98. If we took a look at some more food products, something like Campbell's soup, this is breaking out of a very tight consolidation here, making a new 52-week or not too far off of a new 52-week high. It is a closing 52-week high right here too as well. So also a strong name. It's above the 20, above the 50, above the 200, nice consolidation. So these are the names that you might want to be paying attention to if you see individual pullbacks take place. Monster Beverage, this is one that I've been watching for a while now around this 100 range for a breakout. And you can see right now we're currently just flagging sideways, consolidating, potentially look for a break above this pivot line, get to probably shoot around 104, 105 could be a good target area. We had that MACD turning around, and it's all in bullish context. We have the price currently staged above the 20-period moving average. The 50-day moving average is coming into this area, so even a pullback like this could be a potential opportunity with a tight stop loss, and then you play it to the upside if we get that type of movement. Another one is tobacco. This is ticker symbol MO. It is back above that 200-day moving average, above the 20, above the 50, and you can see it's kind of coming out of this pivot area, out of this consolidation right here. So this is another name to potentially watch it. If we get some more movement on it, it could potentially come to fill this gap at around 49.50. So those are a couple of names within the consumer staples that are looking good, but you can do the same thing with, XLI, which I've done there, XLB, and so forth. And we have like utilities coming up and, trying to get into that improving quadrant there too as well. It's the consumer, consumer discretionary and technology that has been some big laggards. You can look at the heat map today. Tesla was down 11%. So I got whacked out of my position at about minus 5.5% on a 3% position. And I'm looking to scale back in now a little bit at 110, 105, and 100 just for another 3% position. I usually take 6% positions in stock equities, but because of the volatility here and it's fading the current trend, I'm just looking to grab smaller portions and scale into them very slowly. Netflix was another one that was big down, and then also Nvidia. So Apple down, Microsoft down, Google down, Meta down, Amazon was big down. Nvidia and Tesla were the two that got zapped by Cocoa. Those were the big hits to the downside. Now, if we look from a larger perspective, like a year-to-date perspective, the Qs, they're down 33% year-to-date. So it's been a treacherous year for the Qs. And if we go into that a little bit further and look at like the Fangman stocks, where you look at Meta, it's down 65%. Apple, it's down 26%. Remember this one, because this could be very well the next shoe to drop. 26% in Apple. Netflix was down 52%, but it's off its lows on the year. Google is right around its lows for the year. You can see it wiped out 2021 there. It's down 40% on the year. Microsoft is down 28.88%. Amazon's down 50% on the year. You can see just a massive black bar here, just getting completely crushed, coming back to around that 2020 low there. Nvidia, 51% to the downside. These were, Nvidia, Tesla, they were getting hit hard, and you can see it's off of its 2022 low slightly. Tesla is on its yearly low as it stands right now, and at 69. It'd be funny if I guess it wouldn't be funny, but I mean, 69%, if that was actually the low for the year, be the meme year for sure. But yes, closing at around its yearly low right now. Still have a little bit of time left. And then Bitcoin is down 63.86%. And then those are some of the bigger names that were traded with throughout the year. And if you take a look at some of the more names that got completely obliterated. I mean, the list goes on. Coinbase, right, is down 87% on the year, just a massive hit. And you can see it's just sitting at around its lows. Roku sitting around its yearly lows here too at 82.81% down. PayPal down 63.7%, well off its 2021 high. This is just this year being down 63%. Peloton is down 77%, but you can see it hit a high of 170 last year. This thing's sitting around at its yearly lows. Beyond Meat, it's sitting around its yearly lows, 81% to the downside. Clove Health is down 70. This is crazy. Clover Health, 76%, but you can see it's down 97% since its 21 peak. So SPACs got obliterated. Can't forget AMC. AMC is down 75.87%. GME is down 50.94% on this year. And, if it's going to be like the other stocks, it could have a long ways to go still. It could come back down to this $5 marker if it wants to match back up with that 2021 low. We have TDOC down 75%, and it's sitting around its year-to-date lows. ORC, obviously, is sitting around its year-to-date lows, right? Just cracking now this 2020 low here. So down 68.52%. I did hear news that Kathy is back at it again, buying Tesla. Tesla, just on this month, is down 43.97%. So there is some sort of liquidation going. Something big is taking place, obviously, and it's getting completely and utterly obliterated. If we take a look here, I just mapped out some of the, peak to trough pullbacks, and you can see 53%, 64%, 33, 40, 45, 47, and then right here in these last 5 months, it's down 66%, which is one of its biggest drops we've seen. Probably, I'm not too sure if it's forever, but this is a huge, huge move to the downside. And if we take a look at this chart, this is something that I shared a while ago. We have this head and shoulders pattern, right? And I measured it out when it was around this price, and I was like, that'd be too crazy, to come down to 60. But I said, keep that as a potential, think of it as a possibility, because most stocks have reached the pre-pandemic highs. And some stocks that we just pointed out already hit and cracked through its pandemic lows. And you can see here, Tesla is still far off where we were here on the pre-pandemic high, and obviously the pandemic low, which is around 20. So to think that it can't reach out to here, especially after seeing this type of move to the downside, yeah, it's clearly possible. We're seeing it with other equities and other stocks too as well. We're going to show more about this specifically and how similar it looks to Apple momentarily. So Tesla today on the day, looking at the book map, this is the heat map that shows you kind of behind the scenes more than just looking at candlesticks where orders were hiding out. We started the day here at around 6:30, right? And we had this big old area of resistance, 120 some levels, some orders that just did not get filled. And you can see price came down and it came right into this dark red area, this heat map here. You can see it cracked down through that as soon as those orders were absorbed. Then we came down to this area where there was obviously some orders hanging out, and then finally it cracked through these areas and it cut through this 110 was the level that I was paying attention to throughout the day, including its lower weekly expected move, which we'll get into. And this thing just took a turn for the worse, and it's even looking pretty bad during after hours. So be very careful with this one. I'm looking at level 105 and 100 to potentially add a little bit. I'm just looking for a potential bounce play at some point. But like I said, I'm doing half of my typical full position, and I'm not even there yet. So earlier today on this move to the downside, I did get stopped out of my original position for about a 5.5% loss, but it was only a 3% position. So I'm still taking it pretty soft, still have a large cash position. Now, what's crazy is Tesla had a $11 plus or minus expected move today. Now, going into the rest end of the week, we still have 123% implied percent IV, which is bringing into around a $9.7 expected move still, which could take Tesla down to around $100, potentially even below. And it could obviously take it up. Now, if we take a look here at the expected move, this was for the week. Okay, it was $11.20, 111.95 was the lower, and you can see we hung on that all day long, and towards the end we broke down, and that's where we saw some more heavy sell side activity, and it's continuing to hit down there. So you got to be aware of this, that hey, if we get a 2 sigma move, it could bring us down even further. And where would that take us? It'd take us to 99.35. So if you are watching, watch that level 99.35 if we get some continued sell side activity in Tesla, because it could make for a good bounce trade. I did intraday trade this at the lower weekly expected move today for a quick little bounce. And then I tried to re-get in at about 110 for more of a swing trade. And we'll see how that plays out. But the bounce trade worked out well. Now, if we take a look here, this is Tesla on a multi-year look here, 3 or 4 years. We got 1, 2, 3, 4 years, and you can see there's this period of distribution. And I pointed this out on Twitter where I showed accumulation, and then I showed stage 2 markup, and then stage 3 distribution. And I even showed it, if you go to my Twitter, you'll see I posted it with a tweet from Elon Musk right around this area that said the Fed has to lower rates. And I said, basically, he knows that what the next stage is. The next stage is going to be a decline phase. And sure enough, right, we started breaking down from these levels. As soon as Elon Musk starts talking about the Fed should lower rates, something's going on there. And you can see we cracked down through that, and then we broke really through this kind of box here of distribution. And since then, we just had full gas, full pedal to the metal to the sell side. Now, why I'm showing you this here is not to map out any specific level or whatever. We already kind of did that. But take a look here and then take a look here. Okay, this isn't Tesla, that's Apple. So if I go back to Tesla, look at this box right here, right? It's all this distribution, boom, and then we crack down. Look at Apple, Tesla, Apple, Tesla, Apple, Tesla, Apple, Tesla, Apple. Why am I showing you that? It's because this does look like it could be very well a potential area of distribution. I've been watching this 130 area, and we bounced a little bit from it, but we're holding on. So buyers aren't really stepping in here. So if this gets cracked, I mean, it's a clear shot to 120 to potentially even 110, just down into this area. So be very careful, because the market cap on Apple is 2 trillion, right? So it's still at 2 trillion. So this is the number one stock as far as the weight goes in the SP500. So you can rest assured that if this starts getting hit to the downside, it's gonna bring down the indices with it. And now if we take a look at Apple relative to SPY, this is a while ago that I showed this rising wedge structure on the relative strength line, how we broke down, back tested, and we've been kind of selling off there. And then we also broke down through here on the PMO as well. So the relative strength line, you can see here, is breaking down, which is not a good sign for Apple. We had this bearish crossover. So we'll see, maybe potentially we get some sort of bounce, maybe we don't. But as it stands right now, the bears are in control. And why? What's going on? Well, the Fed is tightening. The Fed, you can see, started tightening up in this area, started talking about it over here. The S&P 500 hit its high right here, and when they started removing liquidity from the system, you can see that just adds to volatility in the S&P 500. The blue line is obviously the total assets, the balance sheet, right? And then the red is the S&P 500. If you don't think that these go hand in hand, just take a look at it, zoom out a little bit here, when they were just pumping liquidity in, right? That moved the S&P 500 right up. And then as soon as we started tapering off, boom, all heck is breaking loose. And this is also with obviously raising rates too. So let's take a look at the S&P 500, the SPX, the big dog. We had this consolidation. We broke down from that consolidation, and as it stands right now in holiday trade, we aren't doing much, but we got to be open for the possibility for something big to still take place. So we're still looking at about 3,900 to the upside would be the upper weekly expected move, and 3,760, 3,750 to the downside, which would be that lower weekly expected move. If you want the weekly expected moves, go ahead and screenshot this page. These are the lower edges of them, these are the upper edges of them, and these are the expected moves themselves. Now keep in mind, If we take a look at the SPY still has around a $6 expected move as it stands right now after today's kind of trading day. Now, if we take a look at the ES and we look at the heat map, there's a couple levels I wanted to just point out here. This is Bookmap. I have a link in the description, not in the description, in the pinned comment if you want to learn more about Bookmap. But this, like I said, allows you to see areas of liquidity where orders are hiding out, which you can't obviously see in a regular candlestick chart. So not much moving today, right? Not much moving at all, but these orders did pop up and I wanted to just highlight them. 3775 to the downside, 3937 to the upside. So potentially coming into one of those areas tomorrow could be an important area to monitor and watch out for. If we take a look at the SPY on the 15-minute time frame, we are below that 5-day moving average, but we are starting to see what we talked about. It start to flatten out, so that's a positive sign, but we need price to break above it, obviously, break above this 383 area, and then that would be a little bit more bullish to see that start curling back around, and then we might have some sort of a trade. You might look at this and say, hey, it could be very well a diamond bottoming pattern on the 15-minute time frame. Then you would measure it like this, boom, that could take us to that 390, potentially even fill this gap up here if we get that bullish momentum, if we get buyers to step in. So that's a possibility. Like I said, we're below the 5-day moving average. It's flattening out, so that's a good sign as it stands at this moment. On the shorter time frame, you can say this is a potential diamond topping pattern. So this could break us right back down to the lower weekly expected move. Amazing how fractals work here. If we take a look at the Qs are the one that's been getting hit, right? The tech stocks are the ones getting mauled, down 1.41%, not too far off that lower weekly expected move right there, and well below that 5-day declining moving average. So as it stands now, the bears have complete control there. IWM, potential diamond bottom here too as well. The 5-day moving average, it's starting to flatten out to turn up here. So we want to see price get back above it. And if that's the case, maybe this plays out as a diamond pattern and takes us up to the upper weekly expected move. But always be mindful that if we start breaking down from these areas and we stay below that 5-day moving average, that is a bearish sign and it opens the door for that lower weekly expected move. That's all I got for you, everybody, on today's episode. We talked about a lot, went through many stocks, kind of where to put your focus as far as, I would say, utilities and consumer staples, even healthcare. Healthcare is another good defensive one to keep an eye on. Some sectors to watch, some individual names that I kind of just pulled up that are going through periods of consolidation, and just some names that are getting completely mauled. So what's going to be in the next shoe to drop? Keep an eye on that Apple stock, because if that starts breaking down, it could get pretty ugly going into 2023, everybody. Hope everyone has a safe and happy new year, and I'll see you back here on the next episode. See ya.